Hi and welcome to the Market Alert for Monday the 13th of February 2023. So stocks, bonds and gold slammed as Fed pivot party crashes. Next week's avalanche of data will tell us if the party is really over. Well, the only really big news we got this week is the CPI, which is out tomorrow. S&P posts worst week since December as markets hedge for hawkish Fed shift. And that's, like I say, it's this one that the market's waiting for tomorrow. 1:30, we've got the CPI, or as it's known in the trade, the CPI, because we all know that inflation is running far higher than 6.5%. I mean, it's an absolute joke, but there you go. And then on Wednesday, we've got the UK CPI as well, and that's also forecast to actually start to drop off, which you'll get. You'll get waves of inflation. And at the moment we're having a bit of a retracement, and then there'll be another one as energy prices continue to rise, etc., and feeds back into the system. It's not just one straight up move in CPI. It's just like a market. It'll go on and make another new high. What else have we got in the week? Retail sales, PPI. Yeah, there's a few more inflationary ones, but the main one, like I say, tomorrow. And then Wednesday morning for the UK. They're the big ones this week. Okay, so we'll look at the market action for Friday. We'll kick off with the Dow. So in the Dow on Friday, we see the market trading down to the 50 EMA, and overnight market's got a bit of weakness as it's bumped into the 5-bar moving average in the daily charts. This is what it looks like for Friday in the pre-market Dow. Prices moving lower along with European markets, and then again, just as they did all of last week, move the market back up towards the 200 bar moving average there, and then the market selling off overnight, selling off down 150 points, sitting on the DP, but now getting ready to make its way back to the high, long way off the low. So the high is closer than the low at the moment for the Dow. In the implied volatility, this dropping down also to 1652 off that high of 1817 that we saw during Thursday's session as well. So coming back once again. If the CPI numbers come in as forecast or lower, then it's going to send the market higher and the implied volatility back down. And we want it back down in these sort of areas to give that really good correction that the market needs and we've been looking for some time. So down in those 14 areas or lower, we've had a 1349 before we had the reasonable pullback in January of 22, and then you'll see the other ones as well where they've been really good pullbacks where the market's got down to these sort of levels here. In the German DAX for Friday, the market down. We've got demand that was buying into the market as it moved lower during Friday, and overnight the market's already coming off Friday's low. Let's have a look at the 30-minute chart of this, and you'll see there overnight there's the low, and the market coming off this at the moment, struggling a bit with the 20-bar moving average. But on Friday's main session, the market was sideways. Again, we moved up and then we sold off, as can be seen here. And then the market just trading in a range of 50 points for the remainder of the session. We gapped lower overnight and we're trying to make our way back at the moment. There's a bit of weakness around there. We're certainly, with the DAX compared to the Dow, is closer to Friday's low than the Dow is at the moment. In the 5-minute chart, there you can see the future's quiet, and then we explode when the cash market opened. We didn't stay up for long. We got a retracement. Then the market traded sideways, struggling with the close of Thursday and the 200 MA, and eventually breaking down, which you see there. It was a good move to the downside on Friday, which I took advantage of. And then the market rallying back with the Dow in the afternoon till it ran out of steam, traded sideways, and then as the cash market closed at 4:30, the market retracing around 50% or just 62% of its up move that it saw with the Dow. Trades for the whole week actually is 1,021. a profit factor of 4.39, and win to loss is 60-40 there for the week. So yeah, a good week last week. Some nice shorts around again now, which helps with accumulating profits rather quickly, because as you'll know that the market drops faster than it rises. Stairs up, elevator down, as they say. So always looking for a potential short. Now the market's got this indecision, but I'm sure that's going to stop tomorrow if those CPI numbers come out lower than forecast. That will give the market the opportunity to ramp back up again, even if it's in the short term. In the S&P, also showing demand for the daily chart for Friday's session, sideways to lower overnight. In the 30-minute chart, you can see the move down in the pre-market Dow, the electronic session, and then moving up in a volatile manner. I must admit, it was very choppy in the S&P, coming off Thursday's low, and then managing to take out the highs to the left, but not convincingly. And then overnight, the market has traded up towards Friday's high, and then moved lower, but trying to get back above the DP at the moment. So just going back to the daily chart, yeah, we need to take out Friday's high in order to move back to the upside for this market. In the FTSE 100, still sitting around those all-time highs in a sideways range, consolidating a bit. Could also be a distribution phase, but again, that's dependent upon the CPI numbers tomorrow, but it's certainly just treading water at the moment. They brought back the market on Friday. We've got some supply there, which means that if it's come off the lows, then they brought back the market as the sell orders came in. So they're the two highs that need to be taken out. The all-time high is 7934. In the 30-minute chart, we moved higher, and then we were slammed lower. There's your low for Friday. And you can see that there if the market comes back. We're also equidistant to the high as well, as we're trading around the daily pivot, which is the average of the two. So you can see again we've got the 200 MA in the way close, and then the high. But given, like I say, the market waiting for the CPI numbers tomorrow, it could be one of those boring Mondays where it doesn't do a fat lot. But you just never know, do you? In the currencies, GBP, JPY still stuck in that sideways range. It's a good range though, as we look in the intraday in a second. Coming back above the 5-bar moving average for Friday. You can see the shakeout to begin with, and then straight back. So it was down. They brought back the market at the S2 and then sent it back to the DP. And then we got into a bit of a sideways range, managing to rally once more to around 78%, and then trading sideways. However, on the Asian market, we're heading back towards Friday's high at the moment. So good ranges, I say 100 plus points in the GBP, JPY. In the pound, a bit different there, like the DAX. You can see there we've got demand for the daily chart on Friday. The momentum starting to move back to the upside. Again, it's going to be dependent on the CPI numbers tomorrow, whether there's going to be greater interest rate increases or not. So we'll just have to wait and see. 30-minute chart choppy, and then eventually giving way when the dollar index moved to the upside once more. And we're just coming off Friday's low for the pound at the moment. We've got the close in the way, the 50 EMA, 200 MA, DP. And if we continue higher, we've got the BRN in between, and also Friday's high is up there at 121. Bit of a slamming on Friday there for the pound. And in the dollar, this is up on the overnight dollar index. You can see them stuck in a sideways move again, treading water, ready for tomorrow's CPI numbers. So we're showing a bit of strength there at the moment. And in the metals, still a lot of downside pressure. Bars still red, and demand for Friday as they're trying to hold the market. It's oversold in the silver market, and a bit of support coming in there, which you'll see in the 30-minute chart, coming off Friday's low at the moment. During Friday's session, again, we saw the market move higher, but as soon as we get to that London fix time, the market gets slammed. So even if silver's allowed to move up this morning, it will be slammed at the 1 p.m. fix. We traded up to the 200 MA. We got a 78-89% retracement. Market back down to the close, and then just finding resistance at the averages there, as it is now at the 50 EMA. In gold, be a similar picture, moving back up on the overnight at the 50 EMA, oversold momentum wise on the downside, up in the first part of the session, so consolidated at Thursday's close, had a spike up, and then the London fix bringing the market down stronger than silver, and then moving down. You see it's nowhere near the Friday low. If we have a look at the gold silver ratio, you'll see what I mean, as this continues to move to the upside. It's gone from 76 or 75 down here to 84, 85, so you can see there's been a big increase there, showing that silver is getting more of a hammering on the downside than gold is at the moment. Okay, that's it for this one. Let's see what the market has in store. Like I say, it's going to be treading water, I suspect, waiting for the CPI numbers. You'll probably get a flurry at 8 o'clock, and then the market won't know what to do. No, everybody will be afraid of doing something just in case the numbers are better or worse when they're released tomorrow. Okay, that's it for this one. As ever, thanks for watching. See you in the next.